Hey guys, it's Andrew Murray here, and what I'm going to talk to you today is about GoPeer, which is a peer-to-peer lending platform for Canadians. And there's quite a few things I like about this. Now, you might have already seen my video on Lending Loop, which is a little bit different, and I'll link to one of those videos up here in the corner. But the main thing that I want to talk about is GoPeer, and this is actually about lending to individuals. So whereas Lending Loop is where you're lending to businesses and earning a very significant return, anywhere between, let's say, 7 and 30% per loan on average. With this one, you're earning the similar amounts, but you're actually lending it to individuals. And I talked to one of the members over on the GoPeer team, and they explained how this worked. And I really liked it because they actually have a proprietary way of vetting if the people are spending their money on bad things, right? There's certain flags that were set up that will, be able to help make these loans have a very low default rate. So this is kind of like getting credit card interest, and it's really easy to get started. So let's look at the GoPeer team right now. They're based out of Toronto. This is innovative fintech. If you look at the financial system, banks have always been able to make a lot of money because they're able to lend money and earn higher interest rates. Now, when you look at, what typically you'd see in, the bond market right now, this is very significantly different. And I think it's a great addition to your portfolio because it's a little bit different. So I actually talked to Chris. He's the marketing guru there. And this is the team, and they even have a dog on the team. I don't know about that. The dog's even got its own Instagram. Cool. All right, so here's the thing. So this is a fintech development, and it's relatively new. Canadian fintech has some very interesting changes that have come into it, and this is open in January 2020. So it's been a little bit over a year. The minimum you can put towards each loan is $10. So I think this is a great platform for a lot of people. Now, we're actually going to go in and start some loans. I'll show you my account. But for right now, I want to talk about asset diversification. I think right now people are not diversified enough. Even this chart of asset diversification doesn't really include alternative investments like cryptocurrencies, of which I'm a big fan of. Now, if you are Canadian and you're interested in cryptocurrencies, watch this video because this video is gonna show you how you can earn free Bitcoin every day as a Canadian. Not a lot, but every bit helps, and we're talking, somewhere in the neighborhood of $30 to $60 a month in free cryptocurrency. Bitcoin specifically, so it's a good one. Now, I'm not a big fan of bonds. I think the bond return is really, really low. And the problem with fiat money is because of inflation, it's always going to become worth less. So you need to have a certain return in order to make it worthwhile, although it is nice to have some of your assets in cash. So here's the GoPeer Dashboard, and basically you have a nice little summary, the performance. So you can see I'm getting a 9% annualized returns, and I find this very, very low risk. I've just done a little test payment, and I've got 3 loans that are going, none delinquent, none matured, and none charged off. And so there's a nice little chart down. It shows you where the loans are and the historical data and all that good stuff. So what you're going to do is you're going to transfer funds into GoPeer. And the one caveat that's a little bit annoying is you need to transfer in $1,000 on your first transaction. Now you notice I don't even have $1,000 in this account. Well, because you can move it out afterwards, but they're kind of using that as a little bit of a barrier to entry, just because people that don't have liquid $1,000, well, maybe this isn't the best thing for you to do. So you can easily transfer in and out with e-transfer. You can do auto invest. So this will auto invest at certain criteria in the range of loans, and you can actually classify which range of loans to invest in. here is a transaction of some of the loan payments and pending. And what you get back is you get back a little bit of principal and interest with each payment. So the key is, right now you see I've invested mostly in just grade A loans. And obviously, as the loan becomes more risky, the return becomes greater. So you can see here what I've earned from these loans. You can see the pending one, if I had any pending and any closed loans, that would be there. So what we're gonna do is we're gonna invest. So this is the dashboard, and you can search the loans for different things. You know, right here you'll see the purpose, and if you click on it, you will basically see some details about the loan. So the monthly payment, listing date, you know, the funding date is gonna end in 2 days. And so where they're employed, their location, their debt to income ratio. So you see all these different things. Here's the interest rate of the loan, the servicing fee, and the investor's return is going to be 26%. Let's compare that. That was an E-rated loan. Let's compare that with a B-rated loan for home improvement. You see this is in Quebec. The debt ratio is a little bit lower. You can see the annual income, what they do, and all those sorts of things. So this looks like a little bit of a better loan for me to invest in. And you'll see here's the time before the loan closes. So I'm going to show you how to invest in this. So you'll see that when I'm investing, it'll see that, you know, 1% of my total portfolio, and it will, you know, give you these stats. Like right now, you know, 10% of my portfolio is invested in the borrower's province of residence, which is Quebec at the moment. And 0% is invested at this risk grade, right? Because as we saw, I had some notes in A, and then the other one wasn't in B, I believe it was in C. And so it gives you some stats. So if you're gonna invest here, you know, it would exceed the concentration of 5%. And I'm gonna accept and proceed because obviously, you know, we're dealing with a small statistical amount of data, which is $100. So pretty much everything is gonna be more than 5%. So we'll go through, and then there'll be the note purchase, and you have to acknowledge the details about it, and you just click there, and then click there, and then agree. And then what I've done is I've actually pledged to that loan. Now what I like about this is, you know, these are consumer loans, so you can see the interest rate that you can earn for some of these things. And when you look at, you know, Canadian P2P lending, I think this is one area where you should have some exposure. And again, this article is comparing GoPeer and Lending Loop. And again, you can Canadians can invest as little as $10 in each of these loans. With Lending Loop, that's going to be or $25 rather, $25. So investing in 8 loans is riskier at Lending Loop than at GoPeer because you could invest in 100 loans. Also, in this particular climate, being COVID, I'm a lot more comfortable investing. So this one says other. I wonder what that is. I'm a lot more interested in investing in consumers than in businesses, because businesses with all these lockdowns, and I know how high the price of just keeping the lights on and paying those basic expenses at a physical location can be. This is a little bit better. So this person is getting a loan, and they live in Courtenay, BC, low debt to income ratio, decent annual income, and they have a good credit score. So this actually seems like a good loan to invest in, and I'm going to invest in this one as well. So what I'm going to do is I'm just going to go through and invest in some of these loans. And again, the nice thing is, you know, you're putting $10 in each of these loans. So you're helping people get liquidity. Now, why would someone want to get a loan here rather than at a bank? Well, it's faster. It's a more streamlined process. You know, when you look at fintech, you're really looking at making the whole financial system work better. So I'm not going to go through and vet all these other ones. I'm just going to do that when I'm off camera, but it is pretty interesting what you can do with this. This is guy's got a pretty big annual income, and it's got a big interest rate. So interesting. loan, worth a shot, certainly. And the goal here is to, get these rates of returns, which you can see here. They range anywhere from 28% down to 10%, and that's a pretty decent rate of return. This is GoPeer. I'm a fan of it. I'm not giving you financial advice, but if you think you would like to add this and diversify your portfolio and start acting like a bank, then there'll be a link in the description where you can sign up and you'll get a bonus when you create your account. All right, well, that's all I got for you. If you have comments or anything, hit me up in the comments. But I'm a big fan of peer-to-peer lending, and I think it's a new asset class that people should start to get exposure to. That's all for this video. We'll see you in the next one.